The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for TFNN. This is the Commodity Show, and my sympathies go out to J.P. Morgan because I understand that their loss might be not $2 billion but $9 billion, and I'm sure we'll be asked to pay the tab if not happens. Now, the show that I have today will only be 15 minutes long because we will be going silent at 12:15 when the president comes on. I will continue to talk, but it will be in silent mode, which might be a benefit, but who knows. Anyway, I was thinking of Ed Young today, and I just hope that he's doing well, and we'll send out some white light to Ed and also to Bud Roth. Miss having those guys on the show. And I'm going to go to real out on a limb today, folks. I'm going to be talking about the grain markets. You remember about a month ago we were looking at that corn down at the $5 level in Christmas corn, and now it's time to hit the cash register. We really should get out. I might be 100% wrong on this because we're in a weather market. It's it's really it's really hot in Chicago and Illinois and Iowa and everywhere. It's just really incredibly hot across the Midwest. But these are how weather markets work. The first time they get a little bit of drop of rain, these things will top. But the reason why I'm doing this, I'm just really putting on the charts, and that's all I'm going to be looking at are these charts of what I think is going. The first one I'm going to put into Tiger TV is the Soybeans Daily. This is the old crop corn. That means it's July and August and September soybeans. The new crop corns will be November beans, and I want to show you the difference between these patterns and why it's very important. Now, if you would like a copy, there's going to be a set of 7 charts that I'm going to be posting, and I know a lot of you folks are traveling around in your cars and whatever your little handheld devices. But if you'd like to have a copy of these charts, if you'll drop me an email at larry@tradingtutor.com, I'll be happy to send it on to you. But the first one shows that we have a big AB equals CD pattern in the July soybeans, and they topped just about 3 days ago. Corn has continued to go up, and wheat has also topped. We're going to go through these separately, but the first one is the old crop soybeans. Those are soybeans that were grown last year, and these are the ones that are in the demand. Now, when we had that big ABCD, move down into the lunar eclipse and a new moon on June 4th, that was the buying opportunity. We talked about that on this show, and, it was a perfect ABCD, and as Gartley said, you buy ABCD, corrections in a bull market, and that's what we were looking at. But right now, I think we've got a shot at a potential top. And I'm not saying to go short. I'm just saying to liquidate your long positions in the grains because it's important just by looking at these patterns that I'm watching. And remember, folks, I've been in this business a long time as far as the grain business, but frankly, I don't do the fundamental stuff. So I know this is a weather market. I don't think there's any question about it at all. But this is what we're experiencing with 100-degree heat. But the next chart we're going to look at are the new crop soybeans. These are November beans. These are the ones that are growing in the fields now that are affected by the heat. And as you can see, November beans have made a new high above April, and they made it to the exact 1.27 number. And they hit that number on Monday and Tuesday and Wednesday. And so it hit it 3 times. That was at the 14.39 level. We backed off about 35 or 40 cents since that time. But since that pattern is so perfect, I have to assume that it really means something. And I certainly don't want to be long from up in here just because of the ABCD butterfly pattern, irregardless of what the weather is. Now, sometime weather markets, will last, for several months. And if the market goes above, 1440, it's probably going to go a lot higher, but it's going to go a lot higher without me. I am saying this is the time where you want to, hit the cash register. The risk here of being long versus the risk here of being missing the move is just too great, in my opinion. Winners think how much money they can lose, and losers think how much money they can win. And I don't care how much I can win. I'm out of this one. This is it's time to cash out of the corn. And if you've been in beans or wheat, the same thing is true. But these numbers are hitting on everything, and the patterns are hitting on everything. And that's a giant wake up call for people that are in pattern recognition. Now, when you have a soybean, I don't know if you folks know the fundamentals behind. Well, it's not a fundamental. It's just the actual part of a soybean. I'm going to put the soybean weekly chart up, and you'll see that it's made a double top from 2012. It made actually a little bit slightly higher high this week, and now it's down quite a bit from the high. And it didn't quite match the high that we made in 2008. But we've completed the ABCD pattern. We've got another butterfly pattern with a triple top on the soybean meal weekly chart. Now, when you crush a soybean, it looks like basically it looks like a snap pea. If you've never seen one, it looks just like regular snap pea. It has somewhere between 2 beans and 3 beans in the bean pod. And if it's a really good year, you'll have 3 beans, and if it's a bad year, you'll have 2, and if it's a really bad year, you'll only have 1 bean per the pod. So, and they crush that pod, and it goes into, it's about I think it is a 75%, as I recall, 75% meal, and the rest of it is 25% soybean oil. And soybean oil, as you all know, is our vegetable oil that we use in our cooking. It's used in paints. It's used just about in everything. It was brought to the United States by Henry Ford back in the 1900s. He found it on one of his trips to China. He was looking for something to use as an oil-based paint that was very soluble, and you could put different colors in it so that you could paint cars other than black. So this is how the soybeans got here, and from then on, they became, they have margarine and everything else comes from this stuff now. But this pattern that we're looking at has a very ominous portends, in my opinion. Now, realize it's my opinion, but I don't know if you got into this, this trade in corn, because we had Rich Anderson on 2 or 3 times, during the time when corn was going down into that level during late May. And we talked about that because, we said there's hardly ever a year that goes by that we don't get at least one scare for weather. And this is it. We're having the first one right now. We might get 1 or 2 more, but this is the first one, and it's a big one. We've had 100-degree heat in Chicago, and believe me, that's where they're trading this stuff, or where people were watching. But the first time they get a drop of rain there, if they do, these things will back off quite a bit, and I don't want to be involved because they can drop. If you go back and look at 2008 and 2009, you can see that in a matter of a few weeks you can give back all of your profits. And our business here is to try to, maintain our profit potential and not risk very much when we're doing these things. Now, the second part of the equation, when you're looking at the soybeans and you crush the thing into the beans, or when you crush a soybean, you get soybean oil, and then you also get the soybean meal. So what we're going to do now is we're going to look at the weekly chart in soybean oil. And soybean oil has a lot of competitors. It has palm oil, corn oil, olive oil. There's just a whole bunch of canola oil. There's just a whole bunch of competitors for soybean oil. But soybean oil has the biggest volume because it's so easy to grow and so easy to work with. But if you can take a look at this chart, you'll see that this chart has been in the bear market for the last year and a half. And in this last rally, the soybean oil has rallied very, very little. And what that means is, folks, is that the people that are in the soybean market, the commercial soybean market, when they crush a soybean, they really don't care about the oil. They're more concerned about the meal. And that's why meal will gain on oil during a weather market. So this is what's happening right now. This could all change. I could be 100% wrong, but right now these are flashing red lights for me. And believe me, when they're flashing green lights, you have to be careful too. And when you're flashing red lights, they have to be careful also. So this is why I'm bringing this to your attention, because I know some people have bought the ETF, CORN, and I know they've been people have bought some options and things like that. I'm not saying to go short the corn or the beans or wheat or anything like that here. I think that's too risky for most of you folks. But if you're doing puts, and the put premiums on these things are really good now. So if you could buy a put for almost nothing in corn, and because of the fact that it's weather, but that limits your risk. And if you want to go that route, then that's up to you. That would be the route that I would suggest. Now, when we're talking about the corn market, there's two different types of corn. There's old crop corn, and then there's new crop corn. New crop corn is the one that is being grown right now. This is the one we were talking about. Started talking about it in April, and we went down to that 61% retracement at $5 a bushel, and now we've rallied a little bit over $7,500 a contract, and we have gone straight up now for I think it's been about 9 days during this hot weather span. But this is where I'm saying to folks, this is where we ring the bell and stand aside. It could go a lot higher, and if it does, you have my apologies. But frankly, that's enough. I mean, I'm seeing just too many things that are very scary to me as a technician, and no one can tell you what the weather's going to do. There's just absolutely no one that's going to be able to do that. So that's the other thing that you have to. That you have to keep in mind. Now, since we were talking about the new crop corn, now we need to take a look also at old crop corn. This is the corn that we grew last year, and the farmers are in the bin, and that's basically what we're looking at. And I'm going to spread this out a little bit so you can see it just a little bit better. On here, and you'll see. Well, I need to spread it. I need just a second here to do this. I can't walk and chew gum at the same time. Oh, by the way, no one can hear this anyway because this is on silent mode. TFNN said they were going to put me on silent mode when the president came on, so nobody would miss his reading on the teleprompter. So I just don't know if I can. I want to continue doing my work here because, frankly, I just don't want to listen to 30 minutes of gloating. And so I'll just go ahead and keep talking even though there's nobody on the air. If you do want to call on silent mode, it's 877-927-6648. And now we're going to be looking at daily corn. This is the nearby corn. This is July corn. And as you can see, we've had a very strong rally in July corn. And it did not even take out the March highs. Now, the new crop corn, went above that by 1.27, so they're totally different crops. And so the overall bearishness of the corn market is still, quite bearish because, we've been going down for a whole year with lower tops all the way, including during this bull market that we've had where weather's 100 degrees. So there's another, a very strong indication that, we should be very, very careful in here being long corn, beans, or wheat. That's just my opinion. I'm trying to, we got to take a little break. 877-927-6648. Give me a chance to listen to the president.
TFNN has just launched our most exciting sale ever. If you purchase any amount of Tiger Dollars before Sunday, June 24th, you'll receive access to 7 live 90-minute webinars hosted by each of our technicians here at TFNN. Not only do you get a 20 to 30% bonus on your purchase as
how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, continuing our moment of silence here. 877-927-6648. I've also posted into the Tiger TV the charts for wheat, and you can see that it has been in a downtrend, and this last move up, which is also involved in the weather market, stopped at the 61% retracement of the long-term charts. And so I think we're at a very critical level here, and I realize this has nothing to do with fundamentals or weather reports or anything like that. These are just patterns that I'm looking at. They work sometimes they don't work, but most of the times I'm talking in an area of about 70% of the time they're going to give you a pretty good idea of whether to be in or out of a market, and that's what we're trying to do. When we look at these things. I've also posted the chart of the rice futures, which is by far the largest food supply thing in the world. And as you can see from that chart, we've been in a decided downtrend, for quite a while. And rice did not rally very much, but that's not surprising because, rice, basically is not grown here in the United States. It's grown in Asia and India and in the Far East, and so this is why you don't see that move. They'll be affected by monsoon rains, but they won't be affected by that drought type weather that we're having in the Midwest that affects corn and beans and wheat. So those are the different things that we're looking at. So the next thing we need to look at is when we first came on the air today, I posted a chart for gold. We were down here to this level. We've made another Gartley buy pattern here at the 1555 level. We're still trading there, and if you get below 1550, folks, that thing is going to be wrong, so you don't have to risk very much here. And we want to keep a really close eye on this because, we have a triple bottom that's formed at 1522. So there's a little room between 1500 or 1550 and 1522. But in fact, it's starting to look like, this thing might fail. And if it does, you don't have to risk very much here. This is what our job as a trader is. You want to focus on how much you have at risk, not how much you can try to make. That's the real secret to doing this. My guest that I had this past few days, someone that I trained for 22 years ago, I asked him, I said, you did really well, doing this. And I said, what do you attribute it to? The patterns? He says, yeah. He says, the patterns help. He said, but frankly, he said, I try not to break more than one rule at a time. And I said, well, that's a good thing to do. So the faster you understand that you've done something wrong and correct it, the better off you're going to be. The difference between a professional trader and a neophyte trader will be the fact that the professional trader will usually correct his errors, just as quickly as he possibly can. We're going to come to a break here, but I have to tell you a really funny story that happened in the pits back in 1983 when we were trading in the T-bill pits. Mark Schneider, who is a third-generation trader. His grandfather was there, his father was there, and he was there. Was a young trader in the pit, and he went into the T-bill pit, and he did something. He came back out, and he showed his dad, and we were standing right next to him, and he said, look what I did. And he said, well, you made a mistake. He said, go in there and correct it. And so I think his name was Sean. Sean went in to the pit, and he came back out, and he looked at the card, and he showed it to his dad, and his dad says, You doubled your position. What's wrong? He said, I know this is going to turn around. I'm going to be okay on this. And Mark reached over and grabbed his badge, his trading badge, and you had to have that to be in a pit because that's how they match the trades. He just grabbed his badge and ripped it off of his jacket and told him to get off the floor. And I was standing there with Herschel Herendorf, who's one of the best traders I ever met, and he's still there in Chicago with his brother Josh. And Herschel said to Mark, he said, Mark, aren't you being kind of tough on the kid? And Mark said to him, Herschel, he says, it's my GD money. He says, it's not yours, it's not his. When he starts learning to do the right thing, he can stand here with us. Until he does, he's out of here. And that was it. So remember to do the right thing. You'll be a lot better off, and try not to make more than one error at a time, or break more than one rule at a time. The one rule you'd never want to break, folks, is add to a losing position. I think that is probably the silliest one you can do. And the other one is not to predefine your risk on something that you trade. And whether you use a stop or not, or whether you use a desktop, I don't particularly like desktops because they don't fill those. A desktop is when you're waiting for price to hit and then you're going to get out. Well, you'll have 35 different excuses not to use that. A stop is put in there to execute it, to get out of there. Make sure you put it in at a level that it's fair to put in. I think on this gold that we're looking at 1550. If it gets below 1550, you want to be sayonara. Okay, folks, we're going to take a little break here to pay a few bills. 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and we're talking a little bit about gold, the importance of that stop down below 1550. I mean, you got a lot of room between 50 and 1522. But frankly, if it gets below 1550, I will be out of that because it should stop. I've also put into Tiger TV the longer-term chart on the silver market. And as you know, we're getting very close to that 2587 level, which has been that double bottom that we've had. And, you know, we've been down so many weeks in a row in silver. You know, we could easily have a rally here, but we'll have to wait and see. This is a spot where, you know, if you haven't bought it and you're interested in buying it, you don't have to risk very much from this level. You know, it's actually come down and tested it several times now. We have higher bottoms in the gold, which could still be a good thing, but it really needs to hold that 1550 level. If it doesn't hold that, you know, there's really not much that I can see that's going to keep it from, you know, going into, you know, much lower prices. And, we could easily be, going to a lot of lower prices, folks, because, we've been looking at crude oil, and we thought that the crude oil was going to, hold these bottoms that we've had, and now we're down, testing near the 77 level again, and this really is really telling us that, we really don't want to be nibbling at it here because it's beginning to fail. We thought that I haven't done the gasoline futures yet, but I'm going to do that in just a second. But if you look at the crude oil chart, we broke down below those three bottoms that we had in June, and then we rallied back up to those three bottoms, the high of that, which was at the 80 level, and now we're breaking down, and we're almost ready to take out the that 77. 80 level that was our low last week. Whether it holds or not, I don't know if it's going to, but it certainly doesn't look like it wants to at this point, and so that would make us believe that we've got some more deflationary things occurring. So that's what we're looking at in crude oil. We want to take a look now at the gasoline futures because we were looking at those. It had made a bullish butterfly pattern on the daily charts. So far, we've still held that level, and I think we talked about this on yesterday's show. And we are looking at potential here that this one is still holding. So that's still a good sign. Now, what I'd like to do is I'm going to put the daily chart in first. Into Tiger TV, and you can see the bearish butterfly at the top and the bullish butterfly at the bottom, and that's really what what we're looking at. And then what we're going to do is we're going to take a look at the intraday, like we did on Wednesday's show, and take a look at the gasoline futures to see how they've done. So we know that the gasoline futures, bottomed at $2.53 a gallon. We rallied up to $2.66 a gallon, and now we're pulling back. And if we just take a look at the hourly chart, that would probably give us our best idea of what's happening with it. And give me a second here; it's all ready to go. I just have to refresh it for just 1 second, and then we'll be ready. I hope we haven't missed anything that the president might have said. I'm sure he's very happy today because he's pretty much had a pretty big victory, but frankly it's just been a tax thing, so I don't know if it's a big victory or not. That's what we'll have to wait, and we'll see what history will tell us that it's going to do that. I'm frankly more concerned about what's happening to J.P. Morgan because it basically has at least the New York Times has said that there's a very high probability that the loss that Morgan has is not $2 billion, but it's closer to the $9 billion level. Maybe that's why he was at Congress, because he assumed that it was going to be bigger than that. Okay, we're going to put look at the gasoline futures, and you'll see that even though crude oil has been getting banged up pretty badly, we're still quite a bit above the 618 level in the gasoline futures. They've held that 259.5 gallon level that we talked about yesterday. And as a matter of fact, we just took out yesterday's low by just a tick or two, which is actually a good thing if you're bullish, because that's how usually markets will turn. So it still looks okay to buy, the gasoline futures here, and we'll attempt to see if this pattern's going to work, but we won't know until Monday's show. We will. I'll only be on the air one day next week. No, I'll be on Thursday too, because it's the day after the 4th. No, that's right. I'll be off Wednesday and Thursday. Holy cow! What will I do with myself? I won't even know. Anyway, we have to watch the gasoline futures here for sure. To see what if they're going to hold up, and then we will see what's going to happen with them for the next day or two. It looks like crude oil is going to take out that low. Whether it's going to go any lower or not, remains to be seen, but this is what we're looking at. The next one we need to look at, of course, is the Treasury bond market, because we have we've had a pretty good rally here. I would really like to see the bonds get up to that 150 that 150.14 level, which would give us a really good chance to be into the make a Gartley pattern on the upside that would give us a chance to sell it. It would be from our high that we made way back on June the 4th. What we'd be looking for is a pattern that we have the ABCD that's formed over the last several weeks, and we had it come in on the new moon, and that would take us up to that just about 151 level. And that would be somewhere between 150.5 and 151 is what I would be looking for in the Treasury bond. That equates to the TBT price of $15.25 per share. If you have any questions, you can call in at 877-927-6648, and we will try to answer them for you if we possibly can. Now, I also posted into Tiger TV early this morning when we first came on, and then again when the show started, the chart of cattle, because, not many folks trade cattle. It's a pretty good trading market, and, most of us have beef occasionally. And so it trades very beautifully off the patterns. And as you can see, we just completed a beautiful Gartley pattern, 3 days ago. And the cattle have, come out of that Gartley pattern very, very strongly with a gap. And, it's moved actually 3.5 cents in a matter of just a few days. And that's a good sign when it first sees, when it first starts up. That's a good indication that it wants to go higher. So that's what we're keeping an eye on with the cattle market. The bond market, I'm going to repeat, the price is of 150.15 to 151. That's the area that I would really be interested in getting short. We have the TBT price, of course, is 15.25. That's what we're looking at in the Treasury market. I still think long term this has a potential to be the biggest one that we've had for quite a while, and that's why we look at it all the time, is because that's my opinion, of course, that we're going to have that type of potential, and we'll just we'll know more down the road here, but I think we're getting very, very close, to the thing that we want to be looking at. Now, we need to take a look at the U.S. dollar again, because we are now trading right near the 786 rally back after we made that ABCD pattern last week on the 19th. And now we have been up for 8 days in a row, and we're right up against the we talked about it several times, of course. It's that 83 level. This equates to the 124 level, 123.90 level in the euro, and these are very important spots. And of course, the news is just like the weather market that we have in the United States. They're getting ready to do something with some type of a conference over there. Someone told me that they were doing something, but I don't know exactly what it is. But they're talking. And whenever they're talking, for sure that if their lips are moving, what they're doing. Okay, we'll take a look at this dollar index chart, because we've rallied back to the 786 retracement to the 83 level. And so in order to, because the dollar index is 53% of the euro, what we want to do is we want to take a look at the euro too, because we've been following this for quite some time. And every time it's got to 24.50, it's had a huge, a rally of about $700 or $800. So it's giving you lots of chances, to get in. And then last night it gave up the ghost when actually what occurred was the fact that the German employment, in other words, more people were out of work in Germany than they anticipated, and that broke the market down. And then I'm going to put into Tiger TV. You'll see that the 618 was violated at that 124.60 level, and the level for the 786 comes in right about the 123.90 level. So I'm expecting it to, and believe me, I'm expecting is a quantitative word. I'm expecting it to hold at that 123.90 390 level. I mean, everybody is bearish the euro, and that's nothing wrong with that. Just as many as some people are going to be bullish, of course. But I believe that it's going to hold the 123.90 level, and we'll see if this is going to happen over this particular time. But we've been down 8 days in a row, which makes it an outlier event. Usually, markets are not down that often. Anytime you get past 8 days, you can go as far many days. You can go 20 days lower. Look at silver, how many days in a row it's been down. So this is why you've got to say at certain points, you've got to be able to say I cannot risk any more than this on any particular trade, and that's what your goal is to try to keep your losses as small as you can within reason. Somewhere between $300 and $500 on the things we're looking at. And then when you do get one, it's going to give you a better payoff than what your risk is going to be, and you're going to be right more than you're wrong. I mean, all we're shooting for is like 2 out of 3, 65%. No one can be, right all the time. If someone tells you that they're right all the time, don't walk away from that person. You should run away from that person, because that's a sure sign that there's something, really not very right with that person, that's for sure. Now, it's important. I'm going to go back for a couple of years now and just take a look at the dollar, because we've got the whole world bearish, the euro down in here. And on the long-term, weekly charts, we have a lot of patterns coming to roost here between 124 and 123. We have the large AB equals CD, and then we also have the bullish Gartley pattern. And remember our low that we made way back a year ago. As a matter of fact, it was a year ago this time. We were making a low at 118, and then we had a rally all the way up to 149. It rallied 30 points, so that's quite a bit. Oh, we've got a caller. He must not be listening to TV. John, are you there?
I couldn't tear myself away from listening to the president till just now. So,
okay, what can I do for you?
Wanted to slip this in, sir. Larry, I wanted to highlight a difference that I'm seeing in the oil markets. If one wishes to trade oil, there's 2 different contracts one can trade, and both have approximately equal liquidity. The first is the CL contract that's traded on Nymex, which is part of CME. The second is Brent, and that's traded on the ICE exchange, that exchange based out of Atlanta. Now, I've made note of your focusing upon the Nymex crude pattern, where this current price down at 78 has not yet taken out the swing low of last fall. I think that was down at 75 and change. The Brent contract, Larry, is a different pattern subtly, in the sense that Brent, which I just posted in the den, by the way, currently at 91, has decisively broken the swing low from last fall, which was up at 98. And what I'd ask you the question about is, on the Brent weekly, having broken that swing low, when you look at that pattern, what does that pattern say to you, concluding trying to find a trade in oil?
Well, I don't trade the North Sea, so I really can't make I can make an opinion, of course, but I don't know how much it's going to be worth. I don't know. All I know is when you see divergences like this, if the our crude, if the West Texas does not break, the new low, that's telling you that people are willing to buy, West Texas down here, whereas they were willing to buy the Brent. Now, I don't know how much of the world oil is traded, which is traded more. I know they're both traded very heavily, but I don't know which is traded in a greater amount. I believe it's West Texas, but I'm not sure of that. But the fact that you see a divergence like that, John, is very important. I'm glad you brought it to my attention, because I frankly don't watch, Brent North Sea oil. And I think it's very important, especially, if our crude gives up, then there's really no hope.
Gotcha.
Hey, listen, thanks for calling in, my friend, and we'll know in a few days if you're right on this divergence or not.
Thanks for your thoughts, Larry.
Okay, thank you.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, winding it up. We have a call from Jim in Palm Harbor, Florida. Are you there, Jim?
Yes, I am, Larry. I took a couple points and got stopped at 13.18 on a short and then put it on this morning, took a couple more points, and now it almost looks like we were trying to find an A to B, C to D on an up from 13.08 to 13.14, and we've got a full moon coming Tuesday, so I don't know what you're looking between now and...
Well, I think we're going to have some choppiness, is my guess. You know, we made a Gartley buy pattern down there at that 13.08. That was a, the 786 AB equals CD. We had a little bit of a rally from that level. But frankly, my guess is this is Thursday. We got Friday to go through, and then we got a slow week next week because there'll be minimal trading on the 3rd. Many people leave early. There'll be no trading on the 4th, except for Forex, which will be pretty active, I would believe. So I wouldn't, I just trade the smaller swings. I posted it in the room. We had a pretty good bottom there at 1308. If we take that out, I still think we're going to go down and make that, that longer-term 61% retracement at the 1398 level. We're only, 11, 12 points away, so it doesn't take much for that to get there.
Okay. So basically be patient.
Yeah, be patient and just look for 5 or 6 points. You get 5 or 6 points in that thing all the time, and that's $250 to $300. For putting up a couple $1,000, and you don't have to risk but that equal amount. And if you're right more than you're wrong, you should be right at least 2 out of 3 times. You're going to make more money than you lose, and that's what the whole premise is.
Okay. So just anything else besides that new moon coming up on the 3rd that you're looking at over the next week?
No, not really. That's the main thing that I'm looking at. That's correct. Yeah, it's a full moon. Yeah, the full moon on the 3rd. That's for sure. And we have a limited trading that day, and then the 4th will be closed, but the rest of the world will be open, so it'll be interesting to look at.
Okay, that sounds good. Have a good weekend.
You bet. Thanks for calling in, Jim. Okay, we got just a few minutes here. I spent the first part of this show, talking about the grain markets, the fact that we might have reached some type of a top, and I posted the price of the corn today. We opened lower. We had a little bit of a rally, and then the market has since gave almost all of it back. And wheat and soybeans and meal and oil are down, but the corn is still up a bit. But they're beginning to look a little shaky. If you want to see those 7 charts that give you the patterns of why I think the grain markets are topping, you can ask for them at Larry@tradingtutor.com, and I'll just forward them on to you. And I hope that's okay. I'd never even asked Tom if I should even do that, but he's not here, so let's don't tell him. Okay, the bond market, we're looking at 150.15. The stock market, I still believe we're going to be have an upward bias through July, through the whole month of July. It'll be choppy as heck, folks. I'm sure of that, but I still think we have an upward bias because of the Bradley model has basically has no negativity or very little negativity until around the 1st of August, and then after the 1st of August, it's going to be party time, I think. Here we go with my opinion again, but that's what the assumption is, based on the pattern, and we'll worry about it. Don't be concerned about the health care bill. We're going to go on living. I think we live in a great country. We'll eventually get these problems straightened out, and no one really understands the darn thing anyway because it's got so many pages. I mean, how can you have a bill with 2,900 pages? That just seems. That's just unconscionable. That anybody with a brain would even think that you could do something like that. But that's what they're doing, and maybe in November this year we'll change a few things with our congressmen and senators, and that would be where we have to make the changes because the man at the top, he really doesn't have much to do with it. I mean, a little bit, but not nearly as much as the other. Anyway, the silence of the show is now back on, and may God bless everybody. Have a wonderful weekend.